Hey guys, so I've decided to make a video series showing my investment portfolio to track its performance over the years. I have a plan to retire early in the next couple of years, and I wanted to log and see, the ups and the downs of investing. So let's get to it. It looks like as of Friday, I was up 1.6%, and after hours a little bit more. In the past month, I'm down $42. In the past year, I'm up $11,000. And all in all, I'm up $10,808. And that's a total of 55%. So next up, I'm going to go over the stocks that I have and say a little bit about why I'm invested in them. The first one is Tesla. I started investing in Tesla shortly after the Model 3 came out, because that's when I kind of saw the potential for it to really be a big company and be more mainstream. Ever since, it's my biggest, or it's my best performer to date. Let's take a look at, I've doubled my money since I started investing in them. I started investing in them when it was a $211 stock, and since then I've kept adding, so my average cost has gone up. But yeah, I was very lucky to get into Tesla when I did. So then we have Microsoft, and I've jumped in and out of Microsoft a couple of times just because I had some debt that I needed to pay. My motorcycle, there was like a 6% interest that I was paying, and I said I don't want to pay that anymore. I'd rather just pull some earnings. I sold Microsoft at a 12% profit to pay for my motorcycle, and right now we're sitting at 26% profit. So that's pretty good. Microsoft is a pretty solid stock. Facebook, I recently started investing in Facebook. I'm up 11.9%. The reason why I started investing in Facebook is honestly because of Oculus. So I got an Oculus Rift when it first came out, and it was the coolest thing. And then after the Rift, the Oculus Quest came out, and that was so revolutionary because I remember being so upset when I got my Oculus Rift because I needed some sort of HDMI splitter. I don't know. It was really complicated to set up everything. And with the Oculus Quest, you just put on the headset and go. I've been using my Quest way more than I ever used my Oculus, just because it was so easy to just, you just put on your head, you press the power button, and you start playing. Even though I have the link so that I can play off of my computer, I still rather play a cable-free version, because the level of freedom you get it makes it more immersive, even if the graphics aren't as good. And Facebook is one of the few companies that is really investing heavily into virtual reality. And I think that's going to be a huge market in the next couple of years. It's already a pretty large market. So yes, of course, on top of that, you get Facebook, Instagram, WhatsApp, all that stuff. But really, the virtual reality stuff is why I'm personally invested in it. Apple is another company that I've kind of jumped in and out. I bought Apple, I think in 2018 or 2019 when it dipped. I bought it at 150, and I sold it for a 45% profit at $200, and I thought I was a genius. I was like, oh man, I can't believe I timed the market so well. I bought Apple at 150 and I sold it at 200 or something like that. Well, looking at Apple at $318 today, I slapped myself in the face, and I was thinking I should have just kept it. I should have just held. But when I heard rumors that Apple was going to release some augmented reality glasses, I started watching Apple again, and I was waiting for a dip. Didn't get too much of a dip. It kind of dipped just a few weeks ago with the whole thing that's happening around the world. But yeah, my cost is pretty high. It's $296. I kind of just jumped in it. I'm up 7.44%, which is not bad. I will hope for more buying opportunities, but we'll see. So the reason why augmented reality glasses are kind of the reason why I jumped in is because I really believe that in the future, VR and AR is going to be an everyday thing. You're not going to think twice about seeing somebody with augmented reality glasses. And I think it's going to be awesome. I was just watching a video on some guy from Mexico who went to Korea, and he's on TV now, and I was thinking like, man, I want to go to Korea too because they seem so friendly, but I can't read any Korean characters. So with something like Apple Glass, I imagine you'll be able to translate what you see, on the menu when you're at a restaurant. And I can't wait for that feature. I can't wait to be able to travel to different places and not have to worry about being able to read what it is that the characters are saying. I'll just translate it all with my glasses. Okay. Next up, we have SPCE. Yeah, this is a little embarrassing. I started a position in SPCE, like I bought one share. Okay, just bought one. When all the hype was going about, and I was like, well, let me just buy one share and see what happens. At the time, it was like, it was close to $40. And I was like, let me just throw this money out there and see what happens. Sure enough, like within less than a month of me owning this stock, it plummeted. And right now I'm down 14%. But again, it was a small position. I did buy a couple more shares while it was low to lower my cost basis. But I mean, a total loss of $17.35. I'll be fine. I'm just gonna ride this out and see what happens. It's a spec stock, and there's a good chance that it'll go back up past $40 and I'll make a profit in the future. In a year, 2 years, 3 years, I don't need $100 tomorrow, so I'll just leave it there and see what happens. So I normally have all my growth stocks up above and all my dividend stocks at the bottom. I did buy one share of AMD just a few days ago. That's another stock that I trade a lot. And I probably shouldn't, because if I just stuck with it, over the past year, it's gone up, 89%. And over the past 5 years, over 2,000%. So yeah, maybe I can be proud that I've made, a couple $100 trading this stock. But overall, I should probably just buy it and hold. Okay, so on to my dividend stocks. NLA has been one of my best stocks that I've been involved with. My equity in NLA changes. I've had as much as like $3,000 or $4,000, and right now I'm kind of in the lower end. I do treat my dividend stocks sometimes as savings, and I'll pull money from there if I want to buy a growth stock. So for example, I sold a lot of NLA stock to buy Tesla when it was low. And, it's yielded awesome results. I've more than doubled my money in Tesla. Whereas with NLA, with the average of 10% dividend yield per year, it would have taken a lot of time for me to make those kinds of profits. So this is, all my dividend paying stocks. They're kind of like, I have them just so they can generate revenue as time goes by. And I'm expecting them to not change too much in price so that when I want to sell them, I'm not selling for a loss. Right now it says I'm up 8.36%, but what really matters is how much money I've made in dividends, and they've done much more than that. So it's been a pretty positive stock overall. Then we have PowerShares, S&P 500 high dividend, low volatility ETF. I started buying this because I wanted a low volatility stock, and sure enough, guess what happens? Yeah, so January 28th. I bought my first 4 shares of this low volatility stock. Yeah, so here we are, January 28th. I'm seeing this low volatility ETF, and I'm thinking, man, I'm going to put some money into this. The stock at the time was going down a little bit. And I figured, this stock is so sturdy. If we look at its performance, it's been kind of going up a little bit too. So there's even some profits to make from it. And then sure enough, I buy it and it goes down. That's always true for the stock market. As soon as you buy a stock, it's pretty much guaranteed to go down the next day. So I'm going to kind of pile in the rest of my dividend stocks because they're pretty much the same thing. NLA, MFA, STAG, MITT. There are a lot of E-REITs, mostly O realty shares, of course, E-REITs. And essentially, they own properties and they pay you a monthly or quarterly dividend, mostly quarterly dividends. The reason why I have these dividend paying stocks, and especially the monthly paying stocks, is because I don't like standing still. This right here is the worst thing for me. I don't care if the stock market goes up or down. If it's up, I'm happy. If it's down, I'm happy because I can buy some more. But over the past month, look, I've done nothing. I'm down $42.08 over the past month. That's nothing. So I don't like staying still. I want to see some movement. I don't care what kind of movement it is. That's why I have my dividend stocks, because they're pretty much guaranteed to make something happen. With my monthly dividend paying stocks, every month I'm guaranteed to get at least a few dollars into my account. So I don't feel like I'm doing nothing. And lastly, we have my cash. I do try to keep at least $1,000 into my cash, just so in case something happens, a stock goes down and I want to increase my position, then I have a little bit on the sidelines. I probably should have a little bit more than $1,000 considering the size of my portfolio. But like I said in the past, I like movement. I don't care if my stocks go up or down. I just want to see something happen. And with that concludes my first video. So I hope you enjoyed it. If you liked it, give it a thumbs up. And if you want to see this stock portfolio hopefully grow, consider subscribing, and we'll go through this together and see if I get to retire early. On a future video, I'll go into my investment plan and more as to what it is that I'm doing to try to retire in the next 8 years or less. I do want to retire before I'm 40. So if you want to see how I plan on doing that, hit the subscribe button, and I'll see you next time.